Somewhere in the world right now, a government is spending money it does not have. Not in a crisis, not in secret. This is just Tuesday. Roads, salaries, pensions, missiles, hospitals, all paid for with money that will not actually exist until someone agrees to lend it. And every single day, someone does. You have probably never lent to government money on purpose, but there is a good chance you already have. So here's the question. When people say the bond market is bigger than the stock market, what do they actually mean? And why does a market most people never think about have the power to end a politician's career? Start with the simplest possible thing. A bond is an IOU. You hand over money now and you get a piece of paper that promises to pay you back later with a little extra for your trouble. That extra is the interest. That is the whole idea. A loan, sliced up so that thousands of strangers can each own a piece of it. Governments do this constantly. So do companies, cities, water authorities, railways. When the United States wants to spend more than it collects in taxes, which is most years, it does not phone a bank. It sells treasury bonds. Anyone can buy them. Pension funds, foreign countries, insurance companies, your own retirement account without you ever noticing. The pile of American government IOUs currently adds up to more than $25 trillion. Now hold that number next to the stock market and you start to see the answer. Stocks are ownership. There is only so much of a company to own. But debt is not ownership. It is a promise, and promises can be made almost without limit. Every government that runs a deficit adds more. Every company that builds a factory on borrowed money adds more. It piles up year after year, decade after decade, and it rarely disappears. So the total value of all the bonds in the world is larger than the total value of all the stocks. Both are enormous, well over $100 trillion each, but the bonds are the bigger mountain. Here is where it gets strange. A bond has a price, and that price can move even after it is issued. Once you own that IOU, you can sell it to someone else. And if lots of people suddenly want to sell, the price drops. When the price of a bond drops, something clever happens in the background. The effective interest rate on it goes up. Price down, yield up. They move like two ends of a seesaw. That seesaw is the vote. Because when investors get nervous about a government, worried it is borrowing too much, or spending recklessly, or losing control of inflation, they sell its bonds. The price falls. The yield rises. And suddenly that government has to promise more interest to borrow the next batch of money. Its own debt just got more expensive. Not because a regulator said so, but because a crowd of investors all over the world quietly decided it was riskier. Nobody announced it. The market just moved. In the 1980s, an economist named Ed Yardeni gave these investors a name. He called them the bond vigilantes. When politicians misbehaved, the vigilantes would sell, yields would climb, and the government would be forced to change course. One of Bill Clinton's advisors once said, only half joking, that he no longer wanted to be reincarnated as a president or the Pope. He wanted to come back as the bond market because the bond market could intimidate anybody. If that sounds like an exaggeration, look at Britain in the autumn of 2022. A new Prime Minister, Liz Truss, announced a budget full of tax cuts with no clear way to pay for them. Within days, investors dumped British government bonds. Yields spiked so fast that some pension funds began to buckle, and the Bank of England had to step in to stop the damage. Truss lasted 49 days. She was, in a very real sense, voted out, not by the public, but by the market for government debt. So think back to that government spending money it does not have. It is not really borrowing from a bank. It is asking the whole world to trust it, one IOU at a time. And the world answers every single day in prices and yields in a language of numbers that no single person controls. That quiet, endless answer is the bond market. Bigger than stocks, older than most companies, and powerful enough to overrule a prime minister. Now you know.